All right, let's see here how things are looking. Let's go to the Investdoc channel. All right, see who's coming in the house here. Okay, there we go. We are live here. All right, so we got, oh, that may just be me watching. All right, we're going to give it a little bit of time. All right, got a couple people. Iman 7188, hello, how are you doing tonight, sir? Thanks for joining us. We're going to let a few people get in the room before we get going. Please, anybody that's in here, please shout out your city name. I will post. Hello. Thanks for joining. How's the audio? Any problems there? Okay. We're going to. Okay. This is Real Estate Crowdfunding 101. And that's the class, as it were, for tonight. Okay. Let's see how this is looking on YouTube itself. All right, looking decent there. Looking decent. Okay. Chat. Okay. Chat comments. All right. NY and leaving soon. You in the city? If so, I don't blame you for getting out of there. It is crazy expensive in NY. See a couple more people have joined in. Please, if you could type in the chat, name, where you're from, that would be great. That would be great. We'll give another couple of minutes while we're in here. Okay. Yeah. Expensive, man. No doubt. No doubt. I like to go up to New York for a weekend, take in a show on Broadway, get some good eating and that kind of thing, and stay at an Airbnb. Hey, King Nick, how are you? Great. Thanks for coming. I'm just curious, are you guys over from O'Shea's channel or maybe Andre Hatchett? How'd you find me? Just curious. It's always good to know. Okay. Type in the chat there. We'll give it another minute or so. All right. First time on your channel. Yep. Good old O'Shea. I appreciate the fact he's doing a little more serious content these days. So I'll be on there. Probably once every couple of weeks, trying to give some game to the manosphere, as it were. Okay. If you guys could like and share this, that will help more people, more of my subs to get this. Just curious, anybody own any rental property? Anybody done any crowdfunding at this point? Okay. Okay. Yeah, we're gonna go to like 2 more minutes, and then we're gonna get things cranking off. See, another couple people have come in. You can please leave your name, where you're from, how'd you find me? That'd be great. Okay. Oh, O'Shea. All right, good stuff. All right. Well, so thanks for coming to the stream tonight. My name's Kenyon Meadows. I'm a physician, and when I'm not taking care of patients and spending time with my family, I'm an investment enthusiast, and I invest mostly in what's called income-producing assets, rental property, dividend-paying stocks, private mortgages. Blessings coming from Linnell. All right, appreciate that, Ivy. And I do some private lending. Okay, so I'm gonna just jump back a few years. I'm sure most of you have seen some of the flip these house type shows on the H Home and Garden TV network. Wildly popular shows, okay? And leading up into the 2008 housing crisis, I mean, these shows were crazy popular in like '04, '05, '06, and that kind of thing. And, the reason I think that these shows were so popular is because when it comes to real estate investing, there's not a ton of sexy aspects of real estate. Okay, buying a rental property, holding it, collecting rent, that kind of stuff. That's not really that sexy. Okay, whereas flipping a house is sexy. Okay, you get to see the very dramatic before and after pictures. It's relatively short term. Most of these house flips are meant to be done in a few months or maybe a year, which is really short term in real estate. Okay. You get to see the dramatic change. And, when a flip is done right, and certainly they choose the ones for TV that turn out right, you see these large profits. Okay. And so that just induces more people to try to get in the game. Okay. But thanks. Yes, Iman, get the likes up. Absolutely. But you guys know, uh, where do house flippers get the money to do their flips? Okay. Well, they don't get them from traditional banks for the most part. There are a few specialized programs where banks will loan you money to renovate your house. But for the most part, banks loan money on houses that don't need a ton of renovation, that are meant to be sold to an end consumer. Okay. So when a traditional house flipper or a real estate entrepreneur wants to get money, where do they go for? Like if they've got a house that costs, maybe 100 grand, and they want to put 50 grand of rehab into it and hopefully sell it for 200 grand. If they don't have the money themselves, where do they get it from? Well, traditionally, they've gotten it from a network of high net worth individuals. There you go. Hard money. Absolutely. Hard money lenders. Okay. And that would be somebody like myself who might have a spare 25 or 50,000 bucks or something like that, that could contribute to the cost of acquiring and flipping that house. Okay. Now, the reason they call it hard money is because of the interest rates that are charged. Okay. We charge credit card like interest rates on the money. 12% would be on like the low end. Okay. 15, 18% is, hey, Ron, how are you? Thanks for joining us. Those are not uncommon. Okay. So that's why it's called hard money lending. It's high interest. Okay. So if you're paying that kind of interest on that chunk of money, obviously you hope that there's enough fat or enough profit in the deal so that you can still make those payments and still at the end of the project sell the house and still have plenty of profit left over. Okay. Now, instantly, when I talked about, hey, you need a nice chunk of money, high five figures, six figures, maybe even seven figures to participate in this game. That's why, the vast majority of people have never done any private lending. The barrier to entry was pretty darn high, even though it's a great way to make a nice interest on your money. And oh, by the way, when you provide a private mortgage, you're essentially acting just like the bank that has the mortgage on our houses, right? If we don't pay, just like your bank can foreclose on your house and take it, if the real estate entrepreneur or house flipper I'm working with doesn't pay, I have the right to foreclose and take that property back. Now, fortunately, in real life, okay, offline, I've never had to do that. Online, with some of the real estate crowdfunding stuff we're going to talk about, that has happened, not often, but that's the point. It's secured. So it's a way to make a nice return on your money and have it be secured by an asset. So private lending is a very cool thing. And again, for me, I'm about income and everything. And so I get those interest payments every month for the length of time the house is being rehabbed, and however long it takes to sell it. Okay. Now, some very smart people decided, like, hey, can we crowdfund these loans? And instead of asking people to write high 5-figure and 6-figure checks, can we use technology and the internet to make it feasible where people can put in much smaller amounts toward these loans? Okay. Now, before we get into that, I'm going to do a shameless plug here. I'm going to put the link in here. We're about to go through an example that was from my book that I wrote in 2017 called Alternative Financial Medicine. Okay. And in it, I detail all of the various asset classes that I invest in. So, it does have a direct tie in to what we're talking about here. And I'd certainly be pleased if you guys decided to pick it up off of Amazon, and that's the link there. Okay. So we're going to talk about an example that I put in there. And by the way, crowdfunding's only been around since 2000 and late 2012. Okay. And the laws changed to allow them to do that. And so I was kind of an early adapter. So I've been invested on crowdfunding platforms since 2013 and have done like 50 deals or so at this point. So, okay. The general structure of a private loan. Okay. You've got the purchase price, you've got the rehab costs, and then you've got the profit. Okay. And once you add all that up, okay, that turns out this number that they call the after repair value. Basically, what you think that you can ultimately sell your flip project for. And as a private lender, the general rule of thumb is that you don't want to fund the entire thing, okay? You want the real estate entrepreneur to have a nice amount of skin in the game. And so you want to limit your loan amount to about 65 to 75% of whatever the after repair value is, okay? Again, just because that person's, supervising the work and the contractors and subcontractors like that, you want them to have some money in this project, okay? Okay, BK from the Rockies. All right, thanks for joining us. I appreciate it. And so that's a key thing, okay? And one of the other reasons why you do that is because suppose the person starts working on the project and they don't do what they're supposed to do, and they leave the house half finished, okay? I'm a physician. I'm not a construction guy or anything like that. So if I get stuck and have to foreclose and take that property back, I got to have a nice amount of equity cushion in there so that if I wanted to just kind of quickly sell the project half finished to like a wholesaler or some other flipper who would finish the job, I can do that fairly easily because I got about 35% cushion in there in terms of equity. So that's another reason why you do it. It's to kind of protect yourself. Okay. So with that in mind, okay, this is an actual deal that I did in it was an online crowdfunding. Okay. So when you log on to one of these various sites, you'll be greeted by something like this. Okay. It's going to tell you some details about the project. And then we're going to start from right to left in these little boxes here. Okay. So number one, this is a single family residential house. Okay. The real estate entrepreneur or flipper, he wants the money for 12 months. Okay. The amount of money that you're loaning is 69% of the after repair value, okay? And the total loan that they're seeking is $125,000. And the interest rate that they would pay you on that is 13%, okay? So I have done essentially this similar deal in real life with my in-person real estate network, okay, in Jacksonville. And I've wrote out the majority or maybe half or some portion of that 125,000. Maybe two people, maybe three people in the person's network, we all might contribute to that private loan and take it down, okay? But in this situation here, they're looking for maybe 25 or 30 people to put in $1,000 to $5,000 or something like that on the loan and dice it up and split that risk and split that return amongst a bunch of people. Okay, and that's the power of the crowd. Okay, so this was actually, and once you contribute, so for this one, I named this broadcast the 5K house flip because that's how much that I put in on this thing. Okay, and starting at the top, and this is what you would see when you'd log on to your dashboard and your crowdfund platform. Okay, you would see this monthly tabulation of interest. So this project started in the middle of September 2014, and so for part of that month, I earned $34. Okay, and then I got a full month in November of interest, and you see that was $55.97. And essentially, for all the months that the project was going on, I essentially earned the same amount of interest per day. These totals on a monthly basis are just varying a little bit, whether there was 30 or 31 months in the day, or in the case of February, obviously 28 and whatnot. And then when the project completed, I think I got like 1 day's worth of interest in June there for the $3. Okay, so for the time that my money was with this, so this is 1, 2, 3, 4, 5, 6, 7, 8, 9. So for the 10 months that my money was tied up in this project here, I collected a total of $474 of interest. Okay, and then once the house sold in June there, you get your original $5,000 back. Okay, and that is how a private loan works. Okay. Okay, good docs. You're saving lives. Well, I don't know about that. I hope, maybe I'm saving some money, or helping you guys earn some more money. Okay, I'm interested in this crowdfunding, but that's okay. Recession hacker, great question. Most of these sites require you to be an accredited investor. Yes, and in fact, I'm gonna hold out a little teaser thing for you there. Okay, so in terms of which ones don't, because I'm going to give you guys some game on that. So first off, what's an accredited investor? Okay, an accredited investor is basically a high net worth individual, and the specific definitions from the SEC are that you either make $200,000 as an individual, or $300,000 as a couple, or you have a liquid net worth of $1 million minus the value of your home. So the estimates that I read are only about 2 or 3% of Americans are accredited. So obviously, the ironic part is these sites are allowing you to actually risk less money than you would in a traditional house flip, but you already have to be a wealthy individual to do this. So it's kind of like, doesn't really add up. Okay. So there are some sites that do not require you to be an accredited investor, and I think the minimum you can put on those sites is like $100 to $500. So again, drastically lowering the barrier to entry. Okay, so and here we go. So this is a large part of the real estate crowdfunding universe. I have personally invested on 6 of these sites here, okay, myself. And that's probably spanned about 40 projects over the years, okay? And like 36 out of the 40 have performed exactly how you would expect them to. 2 of them require the person who took out the loan, they requested an extension because the house hadn't sold for a few additional months. They kept making their monthly interest payments, no problem. I think the crowdfunding site sent out a poll to all the investors, and I think a majority of us had to vote to say, hey, are we willing to extend this person's loan a little longer? They were paying, and so we did. And then we eventually got our money a little bit later than anticipated, but great. Now, there have been a couple of instances where the person did not, for whatever reason, did not complete the project as they said they were. And one of the values that the crowdfunding platform does for you is that in that instance, they basically take up the legal proceedings against that person. They file suit, they start the foreclosure thing, they get a judgment, and then they ultimately wind up selling the project and recouping money that way. I had one project where we went through that whole process and we wound up getting all of our money back. And there was another project where when you factor in the interest payments we got, we lost a little bit of principal because there was just the person was fighting us, and there was a legal fight, and there was expenses and that kind of stuff. But for the most, so we lost a little bit of money on it. So that's a risk, right? But that's nothing necessarily unique about the crowdfunding platform. That same thing could have happened in real life. Okay, so I still think that this is a great way for people to get some exposure to private lending. I certainly would recommend you start off small, start off with an amount of money that, if you lost it, it wouldn't be the end of the world. But part of the value that the crowdfunding platform is supposed to be bringing is that they're doing due diligence on these house flippers that list the deals on their site. So they say they're supposed to have checked these people out. Do they have a track record? Have they flipped multiple houses? And can they verify things? They look at the financial condition of the person getting the loan and that kind of stuff. And you'll see that reflected on the crowdfunding site. There will be some projects where the credit risk is very high, is very good. They might be like an A-rated project, and therefore the interest on it might be a little lower. It might be like 11% or 10%. And then you see some stuff where the crowdfunding platform is deemed like, okay, these guys, they're more shaky, okay? And so the interest rate might be even higher than 13%, maybe 14, 15, 16, something like that. So that's part of the value that the real estate crowdfunding platform is supposed to be bringing, okay? So again, I would start off small. And if you'd like to know the specific platforms out there that are non-accredited, and there's only a couple, okay? I would ask you guys to at least consider joining my email list. And let me get the links for that. If you haven't, it should be actually down in the description of this video too. Join the email list. Send me a question. That would be great. Certainly that info is in the book. There's a little teaser, so I'm gonna post that. Paste. All right, bam. Okay. Okay, so has anybody done any private lending for real estate? Has anybody tried any of these platforms out at all? Okay. I say, Ron, you said you're interested. Have you done any looking? Has anyone participated actually? Okay. All right. So just to kind of finish off the presentation here, okay? So private mortgage lending is a great way to earn a high rate of interest secured by a real asset. Traditional private mortgage lending has a high barrier to entry, and real estate crowdfunding represents a relatively new and low barrier entry to this alternative asset class here. Okay, Recession Hacker, you tried Fundrise. So have I, okay? There we go. So have you done an actual project? Oh, thank you. Good ebook, by the way. So yeah, my ebook, just so you know, the number one, like despite all this other stuff I do, my number one thing is single family homes. That's my go-to asset class. And my ebook talks about basically, how I buy them and what I look for and that kind of stuff. So yeah, I appreciate you saying that. It sounds like you learned something from it. Yeah, I've been on Fundrise for sure. It is I've had some success there for sure. Okay. Okay. I'm just learning about this option from you. I'm still getting the courage to do Robinhood. Well, Robinhood, man, the nice thing about it, and Robinhood is a free stock trading platform, okay? And it's very optimized for mobile. You just type in your 4-digit little PIN and then boom, your account's up. And Robinhood, man, you can risk even less money with Robinhood. There's no account minimum. You can buy a share of a $20 stock and just sort of see, how that works and whatnot. So, go ahead and jump into it. Okay, Ron, totally new to the idea of crowdfunding. Yeah, it's not something that, a ton of people have gotten into. But again, when you see, the type of, returns you can make and get some exposure to something different than the stock market, and something that can pay you money. And I tell you, man, once you see a little bit of money kind of dripping into your account, on a monthly basis, either from your dividend stock or from your crowdfunding kind of thing, you get addicted to it, man, and you start just looking for other opportunities, So that's what I'm all about. And so I'm trying to spread the gospel, as it were, in that. Okay, I'm looking through here. Careful of iFunding. I think they went under. Yeah. Some of the crowdfunding sites had some problems. Okay. I participated, me being on a bunch of them, I went on one where the site, the so the crowdfunding sites themselves, they're a separate company from the value of the real estate. And I had a company that went under, but the value of the real estate was still there, and it basically got essentially like taken over, and everything is like still going on, and the loans and all that kind of stuff will still continue to perform. And I think once they finish it, that'll be it kind of deal. Okay. So there's the crowdfunding site itself, and then there are actually the assets and the loans and the assets on the site, and that's a separate thing. Okay. But again, you got to be careful. That's correct. So, definitely, start small, risk a small amount of money. And Recession Hacker said, good returns so far. I reinvest my dividends. Okay. Absolutely. Okay. All right. Good stuff. Good stuff. Well, that's encouraging. Yeah, I'd love to see which particular deal that you were on there, Recession Hacker. Maybe you can send me that on the email. Any other questions, at this point? Okay. I'll, keep the stream going on any questions. I hope you guys had a chance to check out some of the other content on the channel, the covered call stuff, the real estate investment trust stuff, and if you guys have anything in particular, like a topic that you'd like to see addressed as a video, certainly let me know, because always hunting for some content and some ideas, and the best stuff comes from your audience. So definitely let me know. Okay. So we'll hang out another couple of minutes here. Liking the StreamYard platform. Oh yeah, this is the ebook here, Buy Your First Rental. So that is it there. If you guys haven't got it, the link should be in the description of this video. I will post that again. That'll get you on my email list, and we'll certainly be doing some special stuff with the email subscribers, keeping connected with you guys as we always do. Let's see here. Post that one more time. Paste. Yeah, man. Oh, yeah. Thanks for O'Shea really helped me out sub-wise. By the way, always plugging other folks' channel. If you guys could do a search for affordable REI, all one word, affordable real estate investing. I'm going to be on her channel tomorrow. Her name is Lisa Phillips, and her specialty is very inexpensive rental properties under $50,000, and she's in the Baltimore area, and that's her specialty. And I'm gonna be on her channel. I don't know if it's live or if it wind up being pre-recorded. But anyway, if you're interested in learning about being a landlord at that price point, which is a little lower than where I'm at now, and I'm kind of framing our show as a little bit of a debate, the pros and cons of the very inexpensive rental versus kind of the more modestly priced rental, which is where I am. So I'd encourage you guys to check that out. She's very good. Okay. Yep. Okay, so they have a e-REIT and e-funds. Yeah. Okay. So on Fundrise, they've chosen to further diversify things. Instead of you investing in one specific house or one specific property, they basically taken that crowdfunded money and spreading it out amongst, multiple properties. So those are basically private REITs. Okay. And if you guys watch my video on real estate investment trusts. You know, we got public ones that are listed on the stock exchange, and then you got private ones, and that's what Fundrise is about. Okay, so good stuff, good stuff. But again, I'd encourage you guys to check out. I'm always gonna affordable REI, Lisa Phillips. Always plug other people's channels. They help me out. So again, if you're interested in that kind of stuff. All right, any last questions, guys? I'm gonna hang out another minute or so before I get out of here. I really appreciate you taking the time, and you know, I'm gonna stick with this year. Put out lots of good content, and try to help the community, as it were. All right. All right, guys. I'm going to check out of here. Look for me next week for another live stream. And again, I'll be making the rounds again. Okay. Y'all have a good one.